Happy Saturday, November 1st, 2025, or Movember. Happy Movember to you. I'm already doing my part for that. In case you're not aware of what Movember is, it's an annual campaign to raise awareness for about prostate cancer, which is a disease that obviously affects a lot of men every year. And Movember is kind of a way to bring awareness to that condition and try to advance the research going into finding a cure and all of that. So, hey, if you have a beard or a mustache, keep on growing it this month. Why not? But speaking of which, what is happening in the world of le Bitcoin and le cryptocurrency, which have had a lot of people in recent months saying, oh, October is going to be best. We're going to have October. October is going to be the saving grace of this market. How's that working out for you so far? October didn't happen, did it? It ended up being a little bit of a downtober. So, yeah, maybe don't trade historical patterns because they break. You know what doesn't break? Maths don't break, right? Like if you have a good read on historical volatility, you don't have to worry about looking for a pattern. If you know which direction something's going on based on the actual information currently happening, you're not going to be losing your mind trying to decipher patterns that don't even exist, looking for meaning where it doesn't exist. Randomness is a thing that's part of the whole trading universe, is the randomness, right? So the more that you accept the fact that randomness is a thing that affects you as a trader, the better off you will be, because you won't be wasting your time looking for silly patterns where they just do not exist, or where even if you find a pattern, it doesn't mean anything in particular. It's random. Why do we know that? Well, because markets are random the vast overwhelming majority of the time. What do I mean by random? I mean the price action is random in many ways. Okay, the price action is the result of the returns, not the other way around. So it's the returns that determine the price action. Therefore, the price action itself is not deterministic, right? If you're looking at price action to determine the future actual price action, you're going to have problems. Now, you can look at price action to determine some things that are relevant to the market, okay? But the things that you will find are not the things you will instinctively think. They are things that we have discovered, for example, at Alpha Trading, that we know about price action that most people do not know because, well, they don't deal in volatility. They're looking at price action as the main gauge, and that is the mistake. Price action is very useful for determining certain things, but it is not useful to understand what the volatility is or what the entropy is. And it's not useful to predict the direction of the price action. Okay? It's useful to understand when an asset is in distribution or mean reversion, but it is not useful to try to understand, is the price going to go up or down based on the price action. That's not a thing. And if you're thinking that it's a thing, I got news for you, you're making a mistake. Right? So don't make that mistake. Learn to read the actual volatility, because that's the actual information that will actually tell you the direction of the asset you're trading. Right? I mean, it really is that simple, right? if you're trading volatility properly, you don't really have to worry about knowing, can I figure out the direction of this? Because you're reading the direction. It's telling you the direction. And if you enter a trade and it goes the wrong way against you, you just get out immediately. You don't mess around. Because you're dealing with volatile assets. There's literally no reason to mess about. It doesn't help you in any way. Right? Get out of the position. Wait for the next occurrence of opportunity to happen, and then exploit that inefficiency in the marketplace with proper entries and exits. That's all you got to do. So Movember, does it mean that prices are going to go up? Who cares? If you've listened to what I just said, it's not about are prices going to go up or down. It's about, oh, hello from India, or hello to India. It's about whether or not you are paying attention on the lower time frames, where the actual trades that you make a difference to you at the end of the day. Because what do you care if the price goes up or down if you're taking trades that are profitable in either direction? You don't, right? It's completely irrelevant to you. It's moot. If you're trading low time frames, what do you care if the prices are going up or down? You literally should not care, because it is in fact irrelevant to you as a trader, or at least it should be irrelevant to you as a trader, right? You should not be concerned with the direction of the market. You should only be concerned with winning the trades. And when I say concerned with, I mean you should only be practicing winning the trades. And when you're not winning the trade, you should be practicing getting the heck out of the trade ASAP, right? That's what you got to do. That's how you know you're doing the right thing. Like, just do the math, right? Start with $100 in your trading account. Do it just for simple math. Limit your losses to 1% maximum. Right? So you're going to, just for example, no leverage on your trade, and you're trading a meme stonk that you don't need to use leverage on because these things move up and down constantly. They move up 1% on a little run up over a period of 10 minutes, then they move back down another percent over the other side of the hill, and they'll just do that all day. They go up and down, up and down. Sure, they'll go up some hills more, they'll go down some valleys more. Sure, whatever. But like, let's just say you're talking about an asset that's just regularly moving up and down, up and down, up and down. And yeah, there's a lot of randomness and a lot of all the normal stuff. Okay, but you don't need leverage to trade easily on this thing. Okay, because it can easily move 1% in a period of a few minutes. Okay. So you trade this coin, you got $100 on the line. It gets to where you're $1 in profit. Great, you take your profit. You do that out of 100 trades, you win. Let's say you only win like 70% baseline what you ought to be winning, right? You only win 70% of your trades. So you made $70 in profit, right? But you've lost 30 at a maximum drawdown of $1 each, right? Or 1%, I should say. But, we're starting with easy math. So you win 70, you lose 30. Net gain, $40. You're in profit. You are a profitable trader, right? But now, if you suddenly increase your drawdown limit to not 1%, but 2%, then you've made $70, but you've lost 60. So now you're only up $10. And if you increase it anything more, obviously, you're going to be in a negative. You're going to be in a loss. And it's very easy to slip in that loss if you mismanage your risk, right? It's very, very easy to say, oh, I'll just increase the leverage a tiny little bit just so I can make more profit. Yeah, but that means you can also make more loss, and you can do it faster Because what typically will happen is people will buy at the wrong time and sell at the wrong time, right? It's normal because people are people. And even if you know the information, you're still likely to screw up, at least a little bit. Maybe your timing, maybe your whatever it is. So instead of screwing up, you just stick to a strict plan, right? You make your 1% gain, you take your profit, right? In this example where it's like, where you can easily do the 1% gain thing, okay? Make 1% plan, and it's not based on the percentage necessarily. It's based on whether or not the asset have hit standard deviation targets, okay? But I'm just giving you an example where hitting those standard deviation targets leads you to, just happens to be 1% in profit, okay, each time, okay, by some magical mystery, okay, because you're trading very low time frames and you're hitting, targets around the central daily range or up at some 4-hour distribution area or daily distribution, whatever it might be, or some VRE level, whatever it is. Okay? And you're just constantly hitting these targets. So you're taking your profits when they go up and when they go down. It doesn't matter. Right? When the asset's moving up or down, it doesn't matter. You're just taking profits. So again, if you trade, you win 70 of your 100 trades and you lose 30. Okay. If your win rate percentage and your lose rate percentage are the same, then you'll come out on top. But if you have an increased lose rate, right, that's larger than your average win rate in terms of percentages, then you're going to be losing, or at best break even, right? Like the moment you cross over that 2-to-1, you're going to be losing money. And at the end of the day, you don't want to do that because you want to come away profitable at the end of the day. And the easiest way to do that is to manage your risk tightly by never exceeding the disciplined line that you set. Right? So, for example, if you set yourself a goal of I'm going to make 4% profit and only draw down, 4% or whatever, and you win 70% of your trades, and great, fantastic. But the probability of making 4% gains on trades without using leverage and without trading incredibly wild and probably very illiquid assets, which increases your risk, probability is pretty slim. Like that if you want to be in fast trades. Of course, if you want to be in longer term trades, yeah, it's possible. But again, you have the increased risk of time working against you. Time degrades your position, doesn't increase your position, right? In terms of like number of occurrences of opportunity you've missed, and also just the lingering probability that increases over time that the returns will go against you, right? Even if they've gone in your favor for a good while, right? Yes, positive returns beget positive returns until they don't, just like negative returns beget negative returns until they don't. So in that very similar vein, right, if you have positive returns bringing you profits and you don't take profit because you're waiting for some magical number like 4%, which is quite high for a particular scalp, right, for you to be hit, you're significantly increasing the probability that the asset will go against you and against your position and start gnawing away at your profits. And then what are you going to do? You're just going to be like, no, hard-headed about it. It's going to 4% or bust. Well, then you're probably going to bust. There is no kindness from the market, right? The market doesn't care about your feelings. The market doesn't care about anything. It just does what it does, right? Buy pressure and sell pressure. They have their way of working. And if you're going to ignore that information, you are going to lose your profits at some point, and probably sooner rather than later, right? Why? Because the market is not forgiving. It is there to move money around from the hands of the losers to the hands of the winners. It's really that simple, right? And you can think, well, I'm going to win this trade and then I'll be a winner. Listen, you might win a trade and think you're a winner, But if you're not applying a disciplined method and trading the things that actually, like using the metrics that actually matter, in other words, the volatility, the entropy, the probabilities, and statistics, then you're not going to be setting yourself up for routine victories. You're going to be setting yourself up for routine losses. It really is that matter of fact. I know these are not things that most people want to hear when they're watching a video. What are your thoughts on? I don't care about Prince Andrew or his title. That's my thoughts about it. Completely irrelevant to my world. Um, what do I think about the market? I think the market, the Bitcoin market in particular, is set up for a very nice move in the high time frames. And again, it does not matter if it's to the upside or the downside, but you can see very clearly, look at the volatility, entropy, and all that stuff. Bitcoin is certainly not done making nice moves to the upside and the downside, right? And sideways to drive people crazy, which is, sorry, but hilarious to me. Because if you think it's driving you crazy at 100K, you wait till Bitcoin hits $250,000 and $500,000 and $1 million. I know you're thinking to yourself, there's no way it's going to do that. Well, people also thought it would never hit $1,000 once upon a time. Hell, they thought it would never hit $100, but it sure did. And then it hit 1,000, and nobody thought it would happen. Right? Or 500 even was crazy, and 1,000, and then after 1,000, went up to 2,000. People were shocked, and 5,000, and 10,000. It ran up to 20,000 before people even noticed. And here it is, well over $100,000. The high was what, 126 and change? That's a lot of money for a coin that started at zero. Right? If you still have your Bitcoins from 2009 when they were free, and you are literally sitting on $22 billion or 22 billion% profits, good on you. You're a great, successful long-term investor, right? Most people not, right? Most people aren't that because they don't have the opportunity or they don't have whatever. The resources, the financial thinking, the financial education, they're just, human beings doing human things. Oh, did I? Nah. And so they tend to miss opportunities, not because they weren't available at all, but because they were harder for them to attain. But sometimes it does happen that people who understand these things, like brilliant people in one sense, might be failing in another sense. So they really want to do this thing. For example, if you wanted to buy Bitcoin way back when and you just couldn't, right? Because you had different things you had to do. Like, it is possible, for example, for people who have known about Bitcoin from the very beginning, and I know people who did, and they simply could not acquire any, right? They wanted to, but they didn't have the ability to buy it for a number of reasons, right? It's not always the same reason. I'm just saying, don't judge a book by its cover. You got to know the details to know the truth. That's just how it is with everything, right? And don't assume people are bad investors or bad traders or bad anything just because they didn't happen to buy some asset that had insane returns over 16 years when they wanted to buy it from the beginning and they just never had the financial access for whatever reasons, right? Born without a pot to piss in, that kind of thing. There's all kinds of reasons, in a situation where they couldn't acquire anything, whatever, and they missed the boat on that, and then they, got issues and stuff going on. That happens. It's happened to everybody that's ever missed the boat on any asset that they knew was going to be a hit and it turned out it was. Right? This has happened. Happens to everybody. That again that is in that space of trying to invest in things and seeing things and perceiving things and like having this gut feeling like, dude, I know if I just put a little bit of money in here and hold on to it for a long time, it'll be great. But again, not everybody always has that those means. And I know, and I sound crazy. Like, what are you talking about? Bitcoin was free in 2009. Yeah, but not everybody has internet. Even today in 2025, not everybody had it back then. Even if they knew about the existence of Bitcoin, like they didn't have regular internet access on their computer, let alone on their phone. And you got to remember, in 2009, on your phone meant like, you know, like a Nokia type screen phone, right? People weren't walking around with iPhones in 2008, 2009. They still had those older phones, right? Um, and it was only from 2009 and 2010 that those phones really started to become super popular, right? And then they became very popular in 2011, 2012, and then basically the whole world was smartphoned up by then. But until then, during the first few years of Bitcoin, for example, uh, a lot of people were still using regular non-smart phones. So I'm just pointing that out so that you're aware that, right, there are different circumstances for different people, and you shouldn't feel bad if you're one of the people who quote unquote missed the boat on something. There are plenty of other things that you can not miss the boat on. And by the way, you can still get into Bitcoin and still make outrageous fortunes if you're a trader, or even if you're just an investor and you just keep buying DCA, 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 right? Hey, how you doing? Hey, how you doing? It's awesome. Halloween party over there. Lots of Filipinos painting the faces of a lot of locals. That's cool. Doing like a Halloween birthday party or something. That's pretty cool. Um, I want motivation again. I have earns on Monday. I don't know what that means. I have earns on Monday. Okay. Good luck with your earns. Um, yeah. So that's kind of the long and short of my message for you today when it comes to these markets, which is like, don't put all your thoughts and feelings and eggs into a basket of like, oh, my favorite YouTuber said this, therefore the market is going to do that. That's not a good way to trade. Not a good way to invest. Right? Look at all the people who in September were saying October. Go look at my videos. Go look at our live streams in Alpha Trading. What did we tell you? We told you ignore those goofy asses because those goofies, they don't know what they're doing. They're going to get you wrecked, right? Like that is their single accomplishment. They will help you get wrecked. They're not going to help you make a lot of money. Those guys with all those affiliate links and all that stuff to promote the exchanges that they have deals with, they don't care if you make money. In fact, little pro tip here, they make more money when you lose money. Yes, they get a percentage when you win, but they get a slightly bigger percentage when you lose in many cases. Not all the time, but in many cases. Um, so, they have an incentive for you to actually trade badly. Despite everything they tell you, oh, use my trading bot. It's scientifically engineered to help you win more trades. Sure. If you're using a $50, $100, $500, even $1,000 a month trading bot, it is not winning you automatically money every month without you having to manage it. It's just not a thing, right? And if you think it is, I got news for you. It's really not. It's really, really not. You're going to have to manage that thing by hand. There's no ifs, ands, or buts about it, right? You are dealing in a world where automation is awesome, but automation is extremely exclusive when it comes to trading. If you want true automation, you have to spend a literal fortune on that system to make sure you don't actually get wrecked, because that's usually what happens most of the time. Is you're gonna end up wasting a lot of resources looking for automation systems that work, and they may seem like they work until they don't. And the problem is you're going to spend most of your time running yourself ragged, trying to simplify a thing that you shouldn't have used in the first place, and trying to make it work, and simplifying it won't work, and doing anything to it won't work except stopping to use it and trading manually. So that's my little message to you. Don't get suckered into doing automated trading, and don't get suckered into following YouTube Jimmy's recommendations. They're not trading. They're making money off you depositing money into their affiliate links. If they show you some trades that they happen to be doing, great, but the bulk of their money doesn't come from that. Okay, the bulk of their money comes from, for most of them, yeah, anyway, at least, bulk of their money comes from you giving them your money, depositing money, right? And then they have virtual accounts that look real, where they have a bunch of winning trades that are set up, but they're not real money. Right? Or like the exchange will even set them up with something that looks like a real account, smells like a real account, feels like a real, in every sense, right? But it's not real money. There's a lot of exchanges that do that, especially because they're unregulated, so they can do whatever they want to promote themselves, and they pay influencers handsomely in bitcoins, yeah, every time they promote their things. So I'm just saying, be careful. I'm not saying don't use exchanges. Of course, you can use an exchange to trade. Where else are you going to trade? Use the decentralized exchange, use a centralized exchange, doesn't matter. It's up to you. But just be careful and don't fall for the affiliate link promoters who tell you what to buy and what to sell. Like, they're not giving you information about the VEX, right? They don't tell you what volatility is. They don't tell you what entropy is, etc. They don't show you how to actually use it. So if you actually want to learn that stuff, remember to come to the Alpha Trading Discord. It's at alphatradinghq.com/discord. Just go there, and Monday through Friday, 9 a.m. U.S. Eastern Time, that's when the live streams happen. So see you there. Till then, have a great weekend. Hope you have a wonderful beginning of November. And if you are growing cash for Movember, by all means, let us know. And I look forward to seeing you guys in the next one. Peace.